everybody. Welcome to this Monday morning game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. Lot to discuss today. Tesla is ripping up. Apple's having a rally. Semis are kind of mixed today. So we saw a big rally late last week in the semis. Now those may be taking a break. We have seen again that Apple and Nvidia tend to move in opposite directions. Money flow one way, then money flow back. So let's get right into it. There's a lot to cover this week. Let's go for it. All right. So first and foremost, let's flip over to the chart. The first thing I wanted to start on was some history, right? So what I did over the weekend, guys, I did a lot of writing in terms of articles on the website on verifiedinvesting.com. And what you can see here is this is an amazing chart. It's a little bit on the bigger side, but what you can see, and you can go to the Verified Investing website, scroll down, but you could see that in 1918 in the Weimar Republic, right, in Germany, basically one gold Deutschmark was worth one paper Deutschmark or mark, right? And look at the inflation rate to the point where one gold Deutschmark was then worth ultimately essentially $1 trillion in paper. And that is what we call hyperinflation, folks. And I only say this not to say that we're at that point yet here in the US or any other country, but when you think about the GDP rates that you're seeing, debt to GDP, you know, Japan, I mean, we've talked about the yen collapsing essentially against the US dollar because of what's going on there. They have 250% debt to GDP ratio. Here in the US, we're about 130%. And ultimately, my point is that we need to learn as a world about history, and history ultimately can help us avoid some of these mistakes. Now, many people would argue and say, oh, well, you know, hyperinflation will never happen. I disagree. I think, again, you're getting down a slippery road where you get to a point where ultimately the debt, there's no way to pay it off, right? Essentially, you get to a point where interest rates are so high that the amount of interest payments on that debt are only going to help or make it grow bigger and bigger and bigger. And then how do countries pay off debt? They print their currency. And that's exactly what happened here in Germany after World War I. Here you can see in this picture, amazing picture, by the way, this woman is literally lighting her stove with money. Billions probably in money right here, putting it right into the stove because this money was worth less than buying lumber or wood for the fireplace. So just things like this you want to be aware of, guys, is that, you know, and again, you look at some of the causes that essentially went on in Germany, and essentially they ended up after World War I. They basically funded World War I by printing money, right? So they had a massive amount of debt from World War I, and then the reparations afterwards from World War I, it only added to that debt. And what did the country do? They said, well, listen, there's no way we can pay this off, so let's just print our money and pay it off that way. And ultimately it worked. The country got mostly out of debt that way by basically hyperinflating their currency. But what ended up really going on here is the people suffered, right? People that had a lot of money ended up that money being basically worthless. People were starving and so on and so forth. And so it's just a little bit of a heads up in that respect. The other thing I wanted to show you guys is this chart here, which is a chart I put together this weekend on reverse repo. Now, if we remember, reverse repo is very, very important to understand the flow of money. And I know it sounds very simple, but the flow of money and how much money is in the system really determines if the stock market goes up or down. To explain this, basically I denoted here, and I put it on this, right, is that here was the reverse repo. And to understand reverse repo here, basically when reverse repo goes up, banks are taking money that they have and parking it at the Federal Reserve. So here banks had a lot of money, you know, and all of a sudden they started to funnel it to the Federal Reserve because it was the safest place to store money and they were getting a guaranteed return, right? What better place than at the Federal Reserve to store your money? Basically as guaranteed as it can get. And so as the banks pushed money into the Fed and stored it there, it sucked money out of the system, out of the financial system. And interestingly enough, you can see as the money got sucked out, this is when the stock market topped in 2021, right here. And as they continued to do it, we saw the big correction in 2022. The bear market, the NASDAQ was down like 37%. I think the S&P was down about 25%. Then what you can see is reverse repo topped right here, and literally basically to the day, the stock market bottomed in October of 2022. So as soon as the banks stopped pushing money and storing it at the Federal Reserve, essentially taking it out of the monetary system, that's when the stock market topped. And then look at this. This was the bottom on the market, the stock market. And then what happens to that money? Well, the Fed eventually has to give that money back to the banks. And as the Fed is giving that money back to the banks, it's flooding the system with so much liquidity. And you can see here, and what do we know about the stock market? From October of 2022 to where we currently are, we basically ripped up, took out the previous 2021 all-time highs, and ripped up and made new all-time highs. And we're essentially right around those all-time highs. Notice reverse repo, though, is starting to level out. And this, to me, is another indicator that if listen, it's not going back up, which would be sucking money out of the system, but you're kind of getting to a plateau area here where you may stop seeing at least additional money from the banks or coming from the Fed going into the banks that then gets lent out into the monetary system. So little stuff like that. I love kind of doing a macro Monday basic, insights here as we get into things. All right. So we're going to take a look at the charts in just a second here, but I do want to do our drawing, guys, because again, there was a free year of Trading View. And again, to do that, what we're going to do is we're going to do our quick drawing here and see who wins that free year of Trading View. So here we go, guys. Again, love the comments on Friday about what you would change or not change about the game plan. I did read them, and thank you so much for posting. All right, so the winner of 1 year of Trading View right here, Williams John-OB2GE. Congratulations, buddy. Absolutely awesome. Well done. And thank you so much for following us. It's my appreciation to you that I can get sponsors as well as Verified Investing to give back to all of you guys each and every day. We do a drawing each and every day. Okay. Don't forget, reach out to Lawton at Verified Investing. He'll hook you up. Again, that's Lawton at verifiedinvesting.com. That's where you email to claim your prize. All right, let's look at the S&P 500. So number one, markets are higher today. Part of that is we're seeing yields come back in, right? So this is your Friday data right here. This is the daily chart. Notice we kissed a level that I gave you in Friday's game plan as a high resistance level at around just under 510, right around 509 to 510. We did get pushed off there. If we flip to the intraday action, we can see that again, here's where we closed on Friday, right over here. And you could see after hours on Friday, and then this morning we gapped up and we kind of floated back down and are moving back up. And so we're right at that. This is that same line from Friday that we were just looking at on the daily chart. This is where we're hovering right now. Now, in all fairness, if yields, remember, markets tend to go up when yields come in. So yields right now, and we can flip over to the 10-year yield, this is your daily chart of the 10-year yield. And if we look at this and we zoom in on it, what do we see? 10-year yield is down today, just a little bit. We're back to 4.63%. Now, again, remember, I've predicted and I've forecast that we should actually come back in and come back here over the next couple months. So I do think yields are going to come back down. The question is, and this is really the conundrum that I'm facing, is that, normally you'd say, oh, if yields come back here, the markets are probably at new all-time highs. I'm not sold on that. And the reason I'm not sold on that is because we saw GDP come in so much lighter. If the jobs data this week comes in light, yes, yields will pull back, but the question is, does that still leave the door open to, oh my gosh, the economy's weakening, but inflation is still moving up? Is there the stagflation worry? Like basically what we saw is when that GDP number came out, the markets were not thrilled about it, right? And again, the question remains is that reinforced by a weak jobs number this week? And just to quickly have you guys on point here. So on Tuesday after the close, Amazon reports earnings. All right, Wednesday morning, we get ADP private sector numbers. We get JOLTS at 10 a.m., JOLTS, which is job openings data. Then in the afternoon, the Federal Reserve announces their policy statement. I'm going to go live, like I do every Fed meeting, at 1:50 p.m. Eastern Time. Mark it on your calendars, guys. 1:50 p.m. Eastern Time. I will be going live here to trade the Fed announcement, cover it, watch the charts. I'm hoping Dr. B joins me as well. We'll be rocking it right here for you guys. Then again, Thursday, after the bell, Apple reports earnings, and Friday morning we get the jobs report. So there's a lot of stuff this week that's going to be very influential on the charts and keeping us on our toes. Okay, so again, yields are coming down just a little bit. That's helping the stock market catch a little bit of a bid here. You can see again, pre-market, the S&P is trading up a little bit here. Again, if we go back to the daily chart, we know we have resistance here at 510 basically, and then also at 513. So these are the two levels I have, resistance number one, resistance number two. Okay, so again, my thought process here is very simple. We should ultimately see a reversion here. We've fallen. We're going to come up here, maybe up here, and then I still think we're going to roll over. I still think this is a sell the rip market right now, even in spite of the recent rally. Remember, you don't have market tops where you just collapse and go straight down because buy the dippers have been programmed. In fact, never in history have people been programmed more to buy the dips than in this market environment because the Fed has always been there to lift us up with free money and printing money. The only problem is a little different this time because inflation is higher than usual. And that's something that, again, we have to take into account to understand if the markets are going to roll over. Because remember, higher for longer rates means that the financial stress on the economy is larger, which is the likely outcome is a recession. So again, I'm still in the camp. We still see a recession by year end. But I do think that, again, you have to think that what's the outcome for stocks in that scenario? Well, if we have a recession, consumers are spending a lot less, and therefore stock valuations probably have to reflect less earnings potential. Okay. Going to a couple other charts, we got to talk on Tesla here real quick. Tesla, guys, was one of my crown jewel calls in this game plan. I said going into earnings, I was long right down here. Big move to the upside. Awesome. Well, guess what? Over the weekend, Elon Musk comes out. Surprise visit to China. China just singing his praises over there. Everything's hunky-dory. And essentially, they got their self-driving system approved in China. The stock is soaring this morning, and I have some levels on the chart, but let's go to the intraday. Let's take a look. You can see, again, look at this move up, folks. Again, if you had told me, I mean, listen, I was bullish going into earnings because of the chart, just simply the chart. But if you had told me we would be up from $139 to $191 in 5 trading days from earnings, I would have said you're crazy. But here we are. Here we are. Now, again, I was bullish down there, to be honest, seeming a little, based on charts and momentum, to be a little overdone here on the charts. So let's go look at the daily levels. So there are a couple daily levels. We just, pre-market, we've gotten through this gap fill here. So again, we're looking at a little bit of a level above, but there's 2 huge levels on the chart. Right here, there's a big gap fill, and there's a pivot point gap fill right here, right? So that zone is basically 203 to 208, I think. 203 to 208. That is a huge level of resistance on Tesla. So just be aware of that. That's looking to me potentially like a level where Tesla could pull back. So again, loved it down here. We know that that trend line was one of the most epic trend lines. The methodology that I teach in my education, guys, is that when you have a trend line that extends back this amount of time, going back to the 2020 lows to this low here, when you get to the second or third hit, the likelihood is probabilities favor a bounce. Once you get to the 4th and 5th and 6th hit, the probability starts flipping to a breakdown. So as of now, this was the 3rd hit of the line. It made sense that it was going to bounce, thus the bullish call. Now the question is, again, are we starting to get into resistance on Tesla? Remember, Tesla's earnings were not good. It's just that the expectations were so low that you just needed, and I said this, I still remember, I said the best thing about being long into earnings is that, especially on a beaten down Tesla, is that Elon Musk's ego takes over. And he does not like to see the shorts winning on that, and so therefore he's going to come out with guns blazing and say amazing things. And that's exactly what he did. They talked about a cheaper car, this and this to compete and all these things, and now he's just putting the screws, you know, to the shorts and driving this thing up. But that'll only last so far until there's actual real sales behind it. So again, watch that 203-ish to 208.9 level. That should be a key level there. Next up, we have to talk about Apple this morning. Look at Apple. All right, so they basically got an upgrade. An analyst coming out, one of the main analysts coming out and saying that Apple is the fear about China on Apple is not. It's not systemic, meaning it's more economic. And so this will pass. And that's really giving investors that positive view today where we're trading at $173.74, right? $173.74. Now, if we go to the daily chart, there are some levels to watch here. So lots of resistance right up around 175. So again, right in this zone, I have a downsloping trend line. Again, it goes off the page, but there's a major level here at 175. This could be a day tradable level for me today, not a swing trade short, but a day trade. And then also you have a pivot point right here and right here at around 178.50, 50, right? So that's going to be my level that I'm watching as well. So these two, as of now, these aren't swing trade short levels for me. These would be more day trading. But again, those are my two short-term resistance levels on Apple. We're very, very close to this one here, and I wouldn't be surprised if we hit that one today. That'll be the first test of resistance on the chart. All right, other than that, guys, again, we'll have to see where things go. I'm looking across the board, but I think at this point, let's get to our wheel spin as it's getting a little bit later in the morning session here. And what we're going to do is we're going to spin this wheel, as we always do, the wheel of appreciation right here at Verified Investing, to thank you guys for being, basically supporters. You guys are supporters of what we're doing here. You're supporters of me, of the company, and we really want to just give back each and every day. So we got TradingView token metrics, winning prizes. We got the live trading rooms, NordVPN, lots of sponsors up here, and that is wonderful. So let's see what it is. Oh, look at that. Another year of TradingView. That is very cool, guys. So again, another year of TradingView, giving away that tomorrow. Again, that's multiple hundreds. I think it's about $300-400 worth of TradingView. Might even be up to $600 because I think it's their premium top level package there. But either way, congratulations to tomorrow's winner. I can tell you right now, we're changing up what we're doing. Instead of asking a question, what I want you guys to do is share this game plan. It drives me nuts that we're seeing 30 to 40. If you combine the views on my channel and on Verified Investing, 30 to 40,000 views on this, it should be 150,000. It should be 200,000. It should compete with CNBC. So what I want you to do is share this on one of your socials and then post as a comment the link to where you shared it. Anyone who shares it, you're entered in, and we're going to just continue to do that because I want to get the views on this game plan to the point where it is massive, where it starts to push out the mainstream media, where you guys, again, help me do this. Let's make this the biggest thing ever. All right. Over here, guys, wait, before we go there, we have to do a quick little 30-second commercial for again, Lux Algo. Lux Algo, an amazing sponsor right here, so take it away for 30 seconds.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
Alrighty, guys, we're back. Thanks for taking that little 30-second break, guys. Right back into the charts. We're right with Bitcoin here, all right? So a couple things to go over on Bitcoin. Number one, over the last week or so, we've been slowly fading. It's been a very slow fade, but what we can see here is that we got very close to my upper resistance line. Now, again, I'm showing the zoomed out because I want you guys to see where these trend lines come from, but in reality, we can zoom in to kind of keep it a little bit simpler and really show you guys at home or wherever you're watching the levels. So right here, we still know that we have our key support right here. We have key resistance right up in this range. And again, these come back from previous pivot points going back off the screen. So watch this level. I believe it's right around 61,000 now. All right, 61K right there. That is your key support on Bitcoin. You want that to hold. If it doesn't hold, you got a level around 59,000, but then nothing until around 53 to 52,000. On the upside, if you're a bull, you got to see this level broken up here. So this level, again, look at how it's sloping up. It's getting closer. In fact, you could actually draw a secondary trend line here through this high, and it's basically coordinated right up in this 70,000 zone up there. So this is your resistance level. This is your support level. I'm still waiting to see which way it breaks. But ultimately, as a technician of the charts, this keeps me very calm. Like, I know a lot of people are so, like, on the edge of their seat about what the next move in crypto is going to be, but you just really just let the chart speak to you. You sit back and say, okay, well, I know my support. If it breaks that, yeah, then you get a bigger down move. If it breaks here, honestly, you're probably going to well above all-time highs. All right, so we'll see what those charts do for us in the coming days. Ethereum tagged. It actually had a decent week in rally here. It did tag resistance, and the resistance worked like a charm. I mean, amazing to just watch the charts in action. So again, we have our two lines on Ethereum. One comes right back here to here and right through here in these lows. right? And that's right what we hit on Saturday, or I should say on Sunday. And then look at how price was rejected right off of that coming back in. Now, again, same thing as Bitcoin. You have your support down here around 2770, 28, I think it's around 2850, give or take. And then we have our resistance right up here around 33 to 3400. Which way does it break? The only thing that's a little nerve-wracking about Ethereum is that at least in the short term, what type of pattern formation is that? And again, we can even draw something like that. Again, this type of pattern is a bear flag or in spirit of bear flag. And so again, you look for kind of clues about which way it's going to go. Slightly negative, slight negative bias, but again, ultimately the arbiter of truth is going to be which line does it break through and confirm through, right? So again, just something to keep an eye on Ethereum. Now gold, we're going to have some fun with gold today because gold's not moving much. But what I do want to do real quick is I want to go to our monthly chart. And I want to show you this, guys. This is pretty darn cool. So on our monthly chart, if we zoom out, there is a monster trend line that I actually showed to you guys, and this is where I said it would stall out on the chart. But what we have here, look at this. So you guys see this chart going back to 1979's high right there. That was a big blow-off move. Then we have this line here. This is the high of 2011. And then if you zoom in, I want to show you this because this is just the power of lines. We did pierce by quite a bit this line, but on the monthly chart, look at the candle. It's actually come back right to that line. Incredible, right? So again, we were trading all the way up here, but the monthly candle hasn't closed yet, and look at where it came back to. And again, the month, what do we have? Like one more day. So I'm very curious to see, do we close on, below, or above on the monthly? Now, I'm going to show you guys something. You want to see the most bullish prediction, my most bullish prediction on gold. And again, please understand, as a technician of the charts, I look at every angle. I look at the most bearish, I look at the most bullish, I look at the levels in between. So what I'm going to do today for you guys is show you, and again, I want to be clear. I don't want people being like, oh, Gareth's saying it's going to 8,000. This is one of many scenarios, but as a technician, I have to be aware of them. So what we're going to do is we're going to go back to our monthly, and what we're going to do is look at the bull runs of each of the last bull markets, and we're going to map that out. We're going to use that as our predictor. And so basically, if we go here, and you can watch it on the chart, and we go up here, we had basically a 634% gain from the beginning of this bull run to the high of that bull run. If we go to the 2000 low, same kind of thought process here. We take that low, and we bring it up here. What do we have, guys? Look at this. Look at that. All right, so now what do we have? So in terms of this chart, we had a 634% gain in this bull market. Gold then ran 630%, essentially the same amount. I mean, isn't that wild that the bull runs were percentage-wise the same in each bull market going back to the 1970s bull market to the 2000s bull market? So by the power of deduction, if we saw from the consolidation lows, where would this go, right? Well, you probably have to use this low, right? So we have to use this low right here as our low pivot, but then let's drag a trend line up 630%. Let's see where this thing could end. Now, again, to do this, this is where it gets tricky, right? Because to do this, I literally have to shrink my chart down insane amounts. Actually, we need to start the line first because otherwise I won't even be able to pull the line from the low. But if we take the low from 2015 and drag it up, we're going to have to keep going. We're only at 141% right now. Now 240%. Now 405, almost there. Let's see where this goes. 630%. We'll call it right there. So basically what we're looking at here, guys, is it, and again, please understand, this is just one potential. This is probably, again, the most bullish potential, but this bull run on gold could potentially take us up to almost $8,000 an ounce. Now, you say, that's wild. I mean, holy cow. Yeah, you're right, it is wild. But in a weird way, if you're like me, you could almost see how that could happen. Like, imagine the economy gets really weak, and the Fed has to start printing money, and the government the less revenue comes in the government, so our debt starts to grow even more. And I mean, again, in a recession, are they really going to push austerity measures and push us into a depression? No, so they're going to have to take on more debt and more debt and more debt. All of these things bullish for gold, right? And so ultimately, by the way, bullish for Bitcoin too, if you're a fan of Bitcoin. And I totally understand, and that's my long-term thesis for being a bull on Bitcoin. But anyways, just wanted to do that little projection for you guys. Pretty wild stuff. Maybe we'll do silver tomorrow to look at where silver could go. Looking at the chart here on oil, oil again is bouncing up just a little bit here. Again, a little bit of a bounce. This could be the beginning of a bearish pattern, so we're going to look at that a little closer. But right now it's holding technical support. And then quickly onto the chart for natural gas. Kind of had a disappointing second half of the week, but it is starting to curve up. So let's see, can we still run up to my target of $2.20 or to $2.25? All right, guys, I got to get to my trading floor here, so let's rock that football right here. You guys, again, thank you so much. Don't forget to share the game plan on one of your socials and just post it up as a comment on Twitter or on YouTube that you've done it so we can verify, and then you will be entered to win that year of TradingView plus all the prizes going forward. Have a great one, guys. Let's go rock this week. Take care.